One.
Hello, Warriors. Good Monday to you. We have a lot of news this week. We have the BOE Thursday, NFP Friday, a lot of big earnings reports in the stock market, ISM. We have the Aussie Central Bank tonight. So a lot of things, even though everyone's on vacation, the fact that the markets are thinner, liquidity less, you could have more exaggerated room, so trade with less leverage and wider stops, let your trades breathe. And before we get to the currencies, I promised that today I'd have what the long-term situation could be for downside potential in things like euro and cable and upside in the dollar. But I want to start with this. Now, everyone knows this is 10-year yield weekly chart, that we've had a lot of great inflation news over the last 6 months, a lot, and surprises to the downside. So as a trader, I asked myself, with all of this benign news and inflation, and markets are supposed to be discounting mechanisms, why are yields so close to 4% rather than back down at major support at 330? The only answer I could come up with is supply, that you could have better inflation news, and the problems with where rates are going to go are just more supply than demand, which creates a natural drift up in rates until perhaps a crisis where people go to cash. There's still big deposit drains on banks. We had a small one fail in the Midwest. I believe it's in Mass, called Heartland. Pretty small, but deposits are still leaving banks at a very high clip. And I don't think this is over. In fact, let's just take one quick look, and then I'm going to get into the currencies and, how we could take advantage of this dollar rally. So here's the regional banks right here. So we've had a nice recovery. There's no doubt. I didn't even think we'd get through 44 and we'd get a third drive, but all we've done so far is rally back to the major breakdown and recovered with this huge blow-off move in NASDAQ and S&Ps. We've generated a bear market rally. I think it's going to have trouble getting through 52, and I still am expecting new lows for the reasons, fundamentals, that I just brought up to you, that rates are still sticky, that flow out of the banks is still continuing. So be careful there. So let's get to the currencies. So last week, I talked about if you didn't sell the top in the euro around 112, I identified 111.5 as a way to finesse, and I did get some off. I didn't ride it all the way down, but I got back in at a better level. So if you executed on my strategy that said sell euro at 111.50 to 12, we got to 50, and we had a big break. So a few things should have happened. You should have been able to take partial profits. It was close to it was a 200 pip move. Can't make money on a 200 pip move. There's something wrong. So you should have taken partial profits. And the other thing you should have done is you should now have BE stops above your entry. But you always hold a piece in case you don't get another good rally to sell into. So I did some work for finessing entries if you don't have anything on. And I actually think the cable is going to be the better short. I actually bought euro pound today, making a bet that we're putting in a higher low here. But the euro, you have some fibs here at 110.70 at 61.8. But my preferred short's going to be in cable, and that's up there around 129, not that much further, 29.10, 29 30 is 61.8. So we have the BOE on Thursday. So perhaps the BOE presents the same opportunity the ECB did. And they raise rates and, we get a little bit of a pop, but it's a failing rally and you sell it right around there. So what I'm saying is draw your fibs from the 1150 high to last week's lows to finesse an entry if you don't have anything on. The Aussie is rallying back to resistance here prior to RBA. I saw rallies up to 7.5. I talked about you could have taken this Aussie signal. It's a second lower high. It's a weakness. I wouldn't step in front of the RBA, but if a selling opportunity presents itself 50 higher from where we are, I think you could try it with a 100 pip money stop. It's also 67.20 and 40 are fibs. 61.8 is 67.40. So that'd be a decent place to try and sell Aussie. So we have the dollar working higher, and after this, I'm going to get back to some long-term stuff. And we failed at 101.5, but this was a very key day. So we could either go from here, or if I just go a little shorter term, let's go to 2 hours. Then maybe after this leg, we had A, and we had B, and we're going to have C, and it could pull back to 110.70 or so before it goes again. We need closes over 102 to seal it, and I do believe this is a low. So I'll start with long-term targets on the dollar. So this looks like a completion of the whole move from 114 down, and I'd be looking for some kind of fib retracement. So from 99, it's 1500. So 61.8 is going to give you 108. Okay, so I think 108 is viable. And, if we start taking out the 104 level, that gives you that from 99. Okay, here are some of the downside targets in the euro for the coming weeks and months. 61.8 comes in at right around 102. So this, you could see that there's pretty good money in it. 102, 78.6 is just going to be a shade under parity. So this is a level I think that the euro could trade to during the upcoming months. Cable, 61.8, 114. It's a 14 pip move, 78.6 under at 109, but I'm going to go with 61.8 back. With the Aussie, I'm thinking we re-challenge these lows, 62.5 or so. We'll see if they hold or not. The yen right now, I'm just standing aside. Maybe this is part of the higher yield story. We could go, held this 138 level and came off it like a banshee. So I'm not going to step in front of it. I see no negative action here. Maybe we're going to make a run at these highs again. The measured move from 138, and call it 128, which the breakout held, and then it tried to retest it and couldn't. It's pretty powerful action. So, the breakout measured 46, it was 10, 48. Well, it's back up around, intervention highs. Just take a look at that. Yeah, 148. So we're almost going to be back here where it peaked in October, along with the dollar peaking as well. So maybe the dollar's just going to be too strong, and we get another run up in the yen, US dollar yen. And that's my coverage for currencies. We'll see. Gold, it's trying to hold. I have to go with, if I'm right about the dollar rally, that we're still going to work lower in both gold and silver. Had a couple negative weeks, but they're also not far from breaking out. I wouldn't want to stay short gold back over these highs. Someone's pointing out a bit of a head and shoulders formation right here with the neckline. So we'll see. Over 1980, it's going to look okay, maybe just for a move to 2000, which is, possible. I'm not going to get all bulled up on gold until I'm all bared up on yen. S&Ps look like they're going to try and follow through. They're not as strong as they were last night. This would be the first daily non-confirmation. See this? Okay. And NASDAQ's still pretty far away from its highs. It may have already peaked, and this could be a failing rally. So I do believe that the next wave up in the dollar is going to take its toll on the stock market. It is a wrecking ball. And as I said last week, and it keeps chugging along, looking pretty good on long-term charts. But when you look at WTI up here, it's not diverging anymore. I just am suspicious of this move. I haven't taken any short positions. And even with the market up, I'll say it again, even though it's broken my heart several times, the VIX still could be bottoming here. We had this big reversal day when they thought they were going to tweak the yen. Still putting in higher lows, held this low with the market making new highs. To me, that's at least a danger sign. It's saying, things are priced to perfection. And the pain trade to me is most market participants are expecting lower yields or a Fed pivot or a Fed pause. And I showed you the 10-year yield chart at the top of this stream. Let me show you the proxy for the long-term Treasury. Looks like it might be trying to put in a triple bottom, but when you look at the weekly, it's still pretty ugly. And where it looks like we're going to try and come out of this range, 99 to 109, it could take you back to the lows. I'll point out one more time, this hasn't been much of a recovery as far as I'm concerned. And perhaps there's just too much supply. They're going to start moving from bills to bonds, the Treasury, and we'll see if this 90 gives way or not. My money is on that it does, and that it's higher yields that people aren't expecting because of all the good inflation news that tips the scale in favor of gravity. So I'll see everyone in the room. Check out TradeView Markets. Good hunting. Mike will be with you in about an hour and 40 minutes, and I'll be back with Mike tomorrow. Don't just count your pips, count your blessings. Adios.